Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Nikunj Dalmia as well as Aisha Faridi. And the markets has been pretty much range bound today. It's been gyrating in a narrow band of just around 50 points. And a lot of those ups and downs is what we have witnessed. But the news at the end of the trading session seems to be that the Nifty is just around that 22,400 mark. And clearly the broader markets are outperforming by a margin because those indices are up 1.25%. India VIX, that's been a big talking point for the trading session today. A 20% drop coming in for India VIX on an intraday basis, slipped below the level of 10 on an intraday basis. So that's something that we're watching out for very, very closely. We're also watching out for the entire real estate pack. Remember, the rental yields seem to have finally spiked to the level of around 4.5% to 5%, which might kind of give you the indication that the investment demand might be back for some sort of real estate as well. And the likes of DLF, Sobha, as well as other real estate names are buzzing in any case in the trading session today. The other pocket which is firing away and is a buzz is clearly the telecom sector. Bharti Airtel sitting at record high levels. Tata Tele, after a long time, you're seeing that stock up in double digits. And Tejas Networks, of course, from the entire ecosystem on account of earnings, is locked in upper circuit. The Aditya Birla Group stocks, they are having a field day today. Vodafone Idea, after that strong FPO subscription and the news flow that perhaps it is a very strong candidate to be added to the MSCI list, is reacting. You have Aditya Birla Fashions up around 9%. Aditya Birla Capital firing away with that 7% gain. However, the top drags for the index, Reliance, no respite from the earnings. HDFC Bank, since its earnings, been on a back foot. And Sun Pharma, on that news of that Dadar unit coming in and the fact that it could be a bit more material than what Street anticipated, has seen a slip of around 4%. But the front line might be a bit skittish. The index might be skittish, but mid and the small cap is where all the action is.
Yeah, it is. But, I think the remarkable thing, Anisha, is that irrespective of the two giants, that's Reliance as well as HDFC Bank, both underperforming, the index is still holding on. You've not seen a mega collapse or so of any sorts. From that Friday rebound, we've managed to do pretty okay. Yes, of course, the broader market is more lively. Of course, there's Tejas Networks, which is, posted a turnaround quarter. You saw the stock spike up 18% towards the dying minutes of trade yesterday. Today, there's been a smart follow through, locked in upper circuit for Tejas. So that's a smart stock which is holding out well. Vodafone Idea, done with its FPO. Some of the marquee names are expected. And of course, the kind of subscription figures that it got for each of the categories, retail included, the stock is still holding up. In fact, not just Vodafone Idea, bring up all the Aditya Birla Group company names and all the stocks, be it Grasim, ABFRL, AB Capital, they're all holding out very, very smartly in trade. A bunch of brokerage notes. Honasas, wherein Jeffries is saying that they like the management focus and agility. Indus Tower, a CLSA upgrade coming in. Target price now put at 450 for a IGL. A BOFA initiation with a buy. Target price now at 540. And one bunch of names which has actually spiked up very, very smartly. Look at the shipbuilding stocks. Mazgaon Dock. Just bring up that intraday graph for you on the screens right now, holding up very, very smartly. Cochin Shipyard has managed to clock a fresh 52-week highs for itself today. Mazgaon Dock holding up a solid 4%. Cochin Shipyard 11.25%. It's currently at the day's highs. And look at a Garden Reach as well. That also is holding out very smartly in trade at the day's highs. A 9.25% move. But yes, coming back to the Aditya Birla Group stocks, that's where the big buzzers are.
See, sometimes you can preempt what markets are thinking. In this case, I would say that we've been really preempting the way how the communication and the way how corporate action from AB Birla Group of companies is coming. 4 or 5 large actions have come this year, and all of them are really centered around creating a lot of value, whether it is by merger, whether it is by new launches, or whether it is by bailing out some of the companies. Vodafone has been bailed out. Aditya Birla Financial reverse merger has happened to really take the holding company discount out. Grasim has made a new launch. Century, the clear vision is to make it number 3 in terms of India's biggest real estate developer, which by the way is not a legacy business for Birlas. Birlas have never been in the real estate business per se, and then they're moving into jewelry business. Paints they've already announced. So why is the corporate Aditya Birla Group, which has been a commodity stroke, a cement group, is getting so aggressive? And I'm forgetting one more, Aditya Birla Fashion, where they are announcing demerger. That clearly means that the management in this case, at individual level, at a group level, at a consolidated level, is very, very, open about the fact that they need to create more value for minority shareholders and for existing equity investors. And I think that is the spirit what markets are celebrating. That if a company like Vodafone, which was on a brink of almost getting, locked down or locked up, has survived without changing its debt structure only by raising equity. Aditya Birla fashion, you're changing the model there, and Aditya Birla Capital merger has happened. So, is this the turn for the Birla Group? That's the larger question. What Chandra did to, let's say, Tata Group of companies, how PSU stocks have come back after government capital expenditure really started. Are we at that big turn where suddenly you will see a galvanized effect in the entire Aditya Birla Group of companies? See, what's your first impression when I say Aditya Birla Group of companies? Cement? And
Commodities.
Yeah. That's it. They're not in IT. They are not in jewelry. They were never in cement. And they don't have a legacy business in real estate, but they're building it up. So are they getting future ready with differentiated approach and greater capital allocation? The same thing I think was there with Mahindra and Mahindra. Anish comes in, non-core businesses have been sold out. They sold out which earlier promoters, Aisha, there was a time when Indian promoters had something called ego, which is that they never sold businesses which they acquired. But the first thing I think Mahindra did was they sold off Sangam. They said, okay, we've done a wrong decision. We're now going to just get rid of it. Are we at that turn for the Birla Group? Because stocks are cheap, valuations are reasonable, and this group in a sense has a lot of intrinsic value which the brand in a sense can unleash. Another one, listing of Novelis. Why would you list Novelis? You're listing Novelis because you know that Novelis, if it's listed in US, the enterprise value of Hindalco becomes better, and independently, the shareholders of Novelis, for the shareholder of Novelis, the sum of part now will increase when price discovery for Novelis will start in the US market.
Yeah, absolutely. The other big trend today, besides, of course, the AB Group companies which are spiking up, is also the kind of crash that you've seen in the India VIX, which was down about almost 20% at one point in time. What are the reasons behind it? What is it actually telling you? Let me take it across to Kunal to do some trend analysis. Kunal?
Well, yes, Aisha, I think it's a very significant kind of a day where the India VIX has fallen below the 10 mark. But is it one of the only days where the India VIX has fallen by a margin of 15%, 20%? And so I think historically we go back and I've taken the data points specifically from 2010 onwards, because prior to 2010 there have been almost like 8 or 9 trading sessions or days where the India VIX has fallen by more than 30% and 35% also. So I've taken that as an exception and moved on from 2010 onwards. And there have been multiple times when the India VIX has fallen by a margin of 34%, 30%. 2010, for example, was one of the years, 2010-11, where the India VIX had fallen on a single day by 19% to 22%. These two are very important and critical dates because both of these are the years and the months and the days where the election data was announced, and when the market got into an end of an event mode, that's where the VIX tends to fall down. So VIX is generally it spikes up pre the event, and post the event it generally tends to mellow down significantly and then go into a corrective phase. But this time around in 2024 we've seen the India VIX already falling before the event is out of the play for the index. And more importantly, we go back to the historical connotations of whenever the India VIX has fallen by a margin of say 15% to 20%, what has actually happened to the index or the Nifty and the resultant trends going forward. So 2010, for example, when the India VIX had fallen very sharply, post that we saw a major bottom formation on the index. 2011 was also similar. If you go back to the charts on the Nifty, 2010 and 11 were the 2 days where the Nifty formed a major bottom. We started off a strong uptrend. 2014, post the elections, the Nifty started a very strong uptrend. The base shifted up higher for the Nifty. 2019 was also very similar. The index managed to move up higher. And 2024, I think we could probably be seeing a similar trend for itself. So, which means when we go back to the historical analysis and the trends for India VIX falling below the 10 mark, as well as falling below the falling to a double-digit tone, we've seen historically that results into the index moving on, going into a gradual, steady as well as a strong uptrend.
Okay, let's take it across to Andrew Holland as well, who's joining us on the show to talk to us about what he makes of the fundamentals, the market fundamentals right now. Andrew, hi, good to be speaking with you. Let's begin by discussing the way mid-caps have come back and the small caps too very, very strongly. So all that fear that we had in the month of March about the frothiness, valuation and a bit of a crackdown of the regulator seem to have completely ebbed away. Do you think we're in for another round of perhaps the selling pressure coming in, or do you think now there's only one way for the mid-cap and small caps?
You're correct, and I think we spoke about it last time, was that, confidence came back to the market. And when confidence came back, some of those fears about, generally about mid caps and small caps have kind of ebbed away now. And we're back to the kind of normal fundamentals of the good stocks within each of those sectors, within that small and mid cap category. We should continue to buy. I mean, as I said, when the small and mid caps were falling, is that, nothing had changed in the economy, nothing had changed to the outlook. Yes, valuations can be overheated, and we all know that. It's not just for small and mid caps, but sometimes for the larger companies as well. So I tend to less worry about, corrections on this. As long as you know your companies and your themes that you're playing, these are always good opportunities. So I think, if we're growing at a 7% GDP growth, then and the expectation that interest rates should fall at some point this year, small and mid caps is going to be continue to be a sector which I think you're going to make a lot of money from.
Andrew, in the month of March, there was there was a universal consensus that small and mid cap stocks are headed into some kind of a bubble and trouble. The view has changed now, but fundamentals and valuations, they still remain the same. So it's not your view, but in general, the view towards mid and small cap stocks, I think, is getting far more bullish than it was in the month of March. Why is that?
Because I think, as I said, we've gone through. I don't know if you want to call it a lack of confidence in terms of that what happened in the middle of March, but it's quickly come back. As I said, the fundamentals for a lot of these companies haven't changed. It goes back to what price you want to pay for a company, in terms of your PEs. Now, to my view, I look at these companies, whether it's a small or mid cap, depending on the sector, where they are within the sector, and try and fast forward, where would this company be in 3 years in terms of profitability and revenues, and what would the PE be if I could have looked at it today, 3 years on, and if I get into a reasonable valuation, then I'll buy it. And I think that's the simple way of looking at some of these companies. Yes, you might be paying 100 times or 80 times or whatever it might be, but in 3 to 4 years' time, you're really buying it on a P of less than 20 because of the growth dynamics for that company and the sector that it was in.
Naresh, Birla Group of companies, is this just the beginning, or they are now looking slightly extended after the recent bout of rally? I mean, suddenly these stocks, Naresh, are up 15, 20, 25% in quick time.
So technically, the bias is very clear. The price action, the volumes is positive, and it's across the board. And it's been for quite some time. The consolidation was really large. A lot of these stocks were major underperformers. So if you look at even after the current move, ABFRL has been an underperformer for a long period of time. Idea, even before this, had gone up to 16, 18 rupees. Right now, it's a case of, after the oversubscription, it's a case of short covering. But when such events happen and price action goes across the group, we've seen good things can happen over the next 1 to 2 years. So technically, it seems like a trend change for the whole group. And there have been multiple events which have seen good price action. So we've seen announcements followed up by good price action. So a demerger in ABFRL led to a 10-15% gap up. AB Capital is at a new 52-week high. You have Century Textiles, which has outperformed. So overall, this could be the time where the sector could, the whole group could be outperforming over the next 1 to 2 years. So we'll keep watching out for dips as a buying opportunity.
Right, okay, a lot of buzzers out there. We'll continue discussing them, but after this very quick break.
All right, we are in for a good day of trade. Friday's low versus where we are right now. Kunal, Friday's low now, what is the importance of that? It appeared on Friday morning that things were looking bad, let me put it this way. On Friday morning, SGX was down 300 points. By the time we ended the day, we were up 100 points, which means we've added 300 points from Friday's low on Friday itself and another 200 points.
Another 300 points, yeah.
So from Friday's low, we are up 700 points.
Correct.
What does that mean?
So I think that indicates that a panic low is already now behind us for the index. That 22,700 mark was also a point where the index formed a double bottom. And in the month of March, when the mid-caps were going through a sell-off mode, that was a time when the Nifty also retested that 21,700, 750 mark. And from there, we saw 800 to 1,000 odd point bounce for the index. So what we've done is we've managed to protect those key supports of 21,750 for the Nifty approximately. This bounce and the comeback of the Nifty above the 50-day moving average, I think brings into place that we are now getting back into a retest of the previous highs. The first hurdle which I mentioned in the last couple of days back also is that 22,500 mark, which is a good round figure as well as a psychological number. And that generally, in the expiry week, we generally tend to see an expiry closer to these round figure numbers because that's where these strikes become hub for option writers either on the call side and the put side respectively. So I think in that sense, I would probably expect that over the next 1 or 2 days, we may just try and come back to that 22,500 mark, but the real breakout could probably happen with the start of the May series.
Okay, we'll watch out for that May series and where it takes us. But in the interim, take a look at NBCC. That stock is flying away as the company has just informed exchanges about their performance in FY24. They say that the business secured touched 23,500 crores at a consolidated level, which is a growth of over 250% year on year. And the management commentary suggests that NBCC is well positioned to not only sustain but also incrementally elevate its growth trajectory, propelling sustainable development forward in India's construction and infrastructure landscape. So that stock is flying away in the trading session. And of course, the other one is BSE, which has surpassed the 3,000 mark for the first time. It's a bit of a breakout. We should pull up all of those graphics. We'll talk about how, the company has moved from the 1,000 rupee stock mark to 2,000 rupee mark. It took almost 400 sessions for the stock to move from 1 to 2,000. But from 2,000 to 3,000, it's just been 100 sessions. And the key milestone dates will also come up for you on the screen. It's been a very quick move as far as BSE is concerned in the last few months. What's your take, Nuresh, on these counters, NBCC as well as BSE, which are firing away?
So BSE has given a fresh breakout after taking a dip in March. The last high was 2,600. We've broken out above those levels. The last range was say roughly 700, 800 points. So the target price comes to 3,400 as such. So technically, the stock is still positive. It's just that at current levels, the risk reward is not great. Similarly, CDSL has also broken out. So that looks a little more interesting relative to BSE. NBCC, the stock did a decent correction from 175 to 110. Then bounced back to 140. Now if it sustains above 135 levels, which was the gap down 3 days back, it could be a positive uptick towards back to 150 to 170. The longer term trend has been positive for NBCC, so buy at current levels as well.
That's the take coming in on NBCC, which has been quite the buzzer in trade. But Andrew, just wanted to get your sense in on, both the heavyweight numbers, Reliance as well as HDFC Bank clearly failed to impress the street. What's the takeaway?
Well, I'm not sure if they failed to impress. I think, from what I've seen of the numbers and all the brokers' reports, I mean, there was nothing, to get overly negative or overly positive about it. I think that's where, we've seen that the share price has just kind of drifted rather than doing anything else. But what it did bring is two things. One is stability. I think, for the banking sector a little bit in terms of maybe NIMs are, the worst is behind us. And as in terms of Reliance, obviously, I think the focus is on the telecom side, and that's where you're seeing a lot of action. In the last week or so with the Vodafone issue as well. So I don't think the market's overly worried about these numbers. If anything, I just think there's nothing, no catalyst to move the share prices either significantly up or down, which is no bad thing for the market either.
So that's a view coming in terms of how the earnings have really stacked up in terms of the earnings season. Not really unimpressive as per Andrew. But Amara Raja Batteries, that one is doing very well. There's a 13% surge on that counter. And of course, Honasa is the other one which has been gaining ground, 8% higher. Remember, yesterday was the day when the company talked about how they've hit the mark of 500 crore for the Derma company brand. And today, of course, there were brokerage notes talking about that they like the fact that the company has been very agile and have been very mindful of the capital allocation. So those are a couple of big buzzes on the upside. But on the downside, Sun Pharma is coming under pressure. What exactly is the latest takeaway on the Dadra 483s that have come out? Let's take it across to Shrishti. Shrishti, how serious does it sound? Can this really escalate? And if yes, what could be the impact?
Well, yes, this could escalate is what Nuvama is looking out for and actually concerned about it, because Dadra unit is quite a critical unit for Sun Pharma, which recently was issued Form 483 with 6 observations. And this is a critical unit. Why so? Because one of the key drugs, that is G-Revlimid, is being manufactured in this particular plant, and Nuvama is not sure whether the company has a dual facility for filing this product or not. And the 6 observations, the details were already out, the kind of observations that were being done by US FDA, and they are a bit concerning. What Nuvama observation is that this plant has inadequate out of specific investigation, the equipment conditions with potential for microbial contamination, procedures issue in the quality unit as well as inadequate field alerts despite repeat customer complaints and inadequate check into the product quality complaints and inadequate examination of deviations as well. So a lot of product contamination reports were there, for which Sun Pharma was not able to actually go ahead and make these procedures having a good explanation for that, and that's why these observations were being done for the Dadra unit. And how Nuvama is looking at it is they are saying that if there's an escalation, it may risk the G-Revlimid sales in the US, and this could lead to 2.8% revenue cut and 7% EBITDA cut for their FY26 estimate. So that's Nuvama's take on this for FY26 revenue as well as EBITDA guidance. They would tweak it if these observations are going to go ahead with an escalation, but indeed a negative news flow for Sun Pharma, and that's why the stock is down close to 4% in trade. Back to you.
Thank you, Srishti. Autos are having a strong day. 2% higher for Tata Motors, 2% higher for Maruti, 1.5% higher for Eicher Motors. Naresh, we talk a lot about the Hero MotoCorp. We speak a lot about TVS and Tata Motors, but for me the star actually has been Eicher, Naresh. I think you spoke about it on Friday or Monday, I don't recall, but it is at an all-time high. Competition, lot of new launches in that space, so to speak, but Eicher right up there. It just doesn't matter what is happening with the portfolio of what competition is doing. Eicher is moving high irrespective of it.
So this has been a stock which I've been recommending for a week now. If you look at what happened with Eicher, is very similar to what happened with the other two-wheeler names. So we went through a consolidation for almost a year in Bajaj Auto. If you look at Bajaj Auto, the stock would trade between 3,000 to 4,000 for almost a year. Then when it broke out above 4,000 levels, it has gone into a trend. Same way, if you look at Hero MotoCorp, it traded between 2,200 to 3,000 for almost a year. And then when it broke out, it got into a rally. Similar range for Eicher Motors for the last 1 year was roughly closer to 3,000, 3,200 on the downside and 4,200 on the upside. In the last 1 week, the stock has broken out of that range. Also, from 2017, the stock did not give much return. The stock had topped out at 3,000 back in 2017. So finally, it seems like a big trending move which has started in Eicher Motors. And if we've seen the pattern continue with the other two-wheeler names, this could slowly and steadily head up higher over the next few months.
In Mahindra Finance, casualty today, a fraud of 150 crores. Is it tip of the iceberg? More is coming. How could there be a fraud? What happens to the entire risk management in place? These are questions which in a sense have prompted the company to delay their earning guidance or the earnings report. As a result, the stock is down by 5%. JLR has recalled 2,400 vehicles as passenger airbag may tear. What is this? I mean, you've given a car where the airbag is not working. And that's JLR.
And in the US.
And JLR, you would imagine, would be anywhere. But
it says US vehicles.
Oh, is that US? Yeah,
Yeah.
US vehicles. Yeah. Okay. See, recalls happening with a lot of companies, and especially luxury cars have been, luxury car makers have been recalling a lot of cars back. Volkswagen has done it, Tesla has done it. But what is interesting in the US market for me is, I'm keeping the JLR news aside, is that at a time when EV is becoming the dominant theme worldwide, in US, hybrid is actually picking up now, and EV sales seems to be plateauing out. And that explains why the Tesla stock in this calendar year has taken a knock of nearly 35%. So it would be interesting to see that the entire ecosystem, where Tesla led a massive re-rating to just about everything, what happens now that the pivot stock, which is Tesla, has taken a backseat. Andrew, everybody is now excited about what's happening in the EV space, and India also, whether it is EV maker like Tata Motors, or electric two-wheeler maker like TVS, or EV component companies like Sona Star. Everybody is excited about owning something or the other in the EV supply chain or the EV chain. How are you placing your bets? Where are you picking your spots?
No, the point you made, Nikunj, is that is very important, is that you have seen a slowdown in EV sales, not just in the US, but Europe as well. I don't think it's, the story's over, so it's probably just a blip in the kind of longer term trend. But the way we're playing it here in India is through the components, the suppliers, rather than trying to pick out, which company or which auto company is going to be the big winner. I'm not seeing a Tesla type leader at the moment. Maybe that will emerge over the next 1 to 2 years. But I think the best way to play it is through the component side, those supplying all of the EV players in the market. And I think that I think will give you a better spread in terms of capturing the upside growth in the whole sector without trying to pick out a real winner in the auto sector.
Great to have you on the show. We'll let you go on that note. Thanks as always for joining in. Time to get in some closing trades on that note. Given that the index is relatively quiet, all the action in individual newsmakers. Kunal, what's your list like?
So I'll go with Grasim as a closing trade. I think it's an interesting breakout, which you're seeing today, about 2,300 mark for the stock. And that too on the back of some quite a strong set of volumes for the stock. So that's something to watch out for over the near term.
Right. Naresh, what about your closing trades?
So that would be a buy on Eicher Motors. The stock has continued in momentum over the last few sessions. Fresh 52-week high today as well. So expecting this to continue towards 4,800 levels at the short term.
Grasim is now the top mover, 4% higher. Next comes Bharti. But if you just look at the F&O universe, it's all the AB group names. Idea, ABFRL, AB Capital, Grasim. Topping the charts there, all 4 slots. We'll take a very quick break, come right back. We'll continue tracking markets.
Welcome back. Well, the index is still buzzing around that 22,400 mark, but it's Amara Raja Batteries, which is up 13%. BSC, all the shipyard companies like Cochin, Garden Reach, as well as Mazga, as we highlighted, and the Aditya Birla group of companies, along with the likes of Fonasa and VCC, are all buzzing away on the upside. On the downside, M&M Financial has actually taken a bigger knock right now, because remember, the company finally did come out with an updated date for its earnings, but it's been pushed back by quite a lot. The next date has been announced as May 30th, which means almost a month and more away from today's date, and that's got the street a bit worried as to what really is the detail of that fraud detection, that it is going to take that long for the company to come out with the earnings. So that's a bit of a worry point. And then Sapphire Foods too has taken a bit of a knock. Even Zomato in the last few minutes has taken a bit of a knock. Let's pull up the intraday chart of Zomato and see what exactly is happening there, because there is a bit of a red tick on that counter. But one space which has been doing very well this year has been the metals basket. Let's take it across and listen to a conversation my colleague Bhavya had with the management at Tata Steel as to what the future holds and what we should make of the strength that we are seeing in the steel prices as well.
I think India is already supplying, if you're talking about steel or you're talking in general.
Like in steel and in general also.
In general, I think India is already a supplier of services to the world. The question is how soon can we be a supplier of manufacturing products to the world? I think there are some sectors which have done well. If you look at the auto component industry, it's a great example of good exports, good global organizations. You look at the chemicals industry, pharma industry, I think we have good examples. Steel, we have enough consumption growth in India to take care of what we produce, but eventually India can be a big exporter of steel as well.
So local demand of steel is also seeing a buoyancy. So how is the industry actually planning to and preparing to meet this demand?
I think in the financial year which has just ended, the steel consumption has grown at about 13%, which is good. It's the way it should be, because for a growing and developing country like India, the steel consumption should grow faster than the GDP growth rate, which has not been happening traditionally, but now with the focus on infrastructure and investment-led growth, we are seeing that change. So I think that's good. The industry is adding capacity to support the growth and demand. So I think it's a good industry for growth.
Also, how has the delays from China in terms of visa requirements as well as import of machinery been impacting the steel industry in India?
I think obviously over a period of time we would like to de-risk sourcing out of China, but all steel companies as part of growth had placed orders on China some time back. So we are dealing with these visa issues. The government is being supportive wherever required, wherever we need to get some technicians in for very specialized activities. But I think over a period of time, a lot of capital goods required for the steel industry will be produced in India, because a lot of foreign majors are also setting up facilities in India to cater to the growing requirement for capital equipment in India.
Also, is this having some sort of an impact on the steel inflation?
Well, steel prices depend largely on international prices, which has been impacted by the fact that China has not recovered fully post-COVID. So China is exporting a lot more steel than they did ever before, apart from in 2015. So if you see, in March, they exported 10 million tons of steel. So that means the going rate is more than 100 million tons a year, which is significant. So that has an impact on steel prices, and which is reflected in domestic steel prices as well. Yeah.
So when we talk about China, everyone is talking about China +1 and how India could be that +1. But where do you think, how strong do you think is India's positioning right now to be that +1? And who are the major competitors? Which countries are the competitors for India?
I think India has the opportunity. India has made good strides in that direction, but we should not be complacent. We should not assume that we will be the best place to come in for foreign investors. There are other options. Vietnam is a case in point. They've worked very hard and they've done well. So we should also work hard. I think we've been good at attracting investments thanks to the PLI and various other initiatives. But I think there's a lot of work that needs to be done, and we should not take our eye off the ball.
Sunil Subramaniam joins us, Managing Director and CEO of Sundaram Mutual Fund. Sunil, long time. How you been?
How you been?
Markets have made a roaring comeback, Sunil. Now, on a global front, news has deteriorated. On the liquidity front, FIs have turned net sellers. But if one looks at the market strength purely based on price, for the small cap, mid cap and the large cap, the strength is quite amazing. So what is causing this constructive price action in the market? I'm not complaining, but I'm curious to understand.
I think it's the SIP book flow. So if you see, almost touched 20,000 crores, and my analysis shows that more than half of it is in small and mid cap funds. So what's happening is that these funds are getting buying power every month. And what happens is that the liquidity, the difference between large caps, mid caps and small caps and liquidity is well known. But what is also very clear is that even within the small cap pack, which is stock number 251 and below, there's a huge drop off on liquidity as you go down the cap curve. So what happens is that fund managers obviously have a filter for quality as in growth prospects, right? So those companies are naturally getting higher in allocations and valuations, and the lack of free float means that the prices are rising quite high. And FI action is absent from that segment because FI action is largely limited to the top 100, 150 stocks in the country. So when FI sells, right, there are some fund managers maybe in a flexi cap who would try to reallocate his portfolio and buy some of those large caps coming cheap. But that's only at the top. And there the price actions don't move so much because free float is very high. So it's entirely a story of the concentrated domestic liquidity in the small cap and mid cap space, combined with the low free float means that the correction which happened because of the froth kind of statement from SEBI and that followed through gave a good buying opportunity because cash is going on coming at the counters. So I think SEBI's efforts to make the mutual fund industries bring down the SIP flows or bring down the small cap fund flows haven't really impacted much because SIPs monthly, nobody is stopped, right? I mean, they've limited it to 25,000 rupees in some case, but the mass market SIPs are still coming into small cap and mid cap. And those flows are coming in, and the industry has done a little bit of a rejig in Feb March when this froth thing happened in terms of shifting some portfolios. So some of the selling, the correction that happened was caused by mutual funds booking profits in some of those markets which have gone up. Now the fresh inflows coming in with the price correction again makes them a good entry point to buy. So I think this is a trend which will sustain for some time because SIPs don't get stopped. And even the recent correction did not mean that your 1 year SIP or something got hurt in terms of value. So people are not going and prematurely closing an SIP because of a temporary volatility. There is some maturity in the domestic investor too happening.
Right. Okay, Sunil, stay with us. Lots more to talk about. But I'm going to quickly take it across to Ansh and find out what's really buzzing in this market as well. Ansh?
Yes, so BSE is the first stock which is buzzing a lot today. The stock has given a breakout from its 12th session consolidation pattern, surpassing about that 3,000 mark for the very first time with volume of over 3 times its 10 session average volume. The stock has also been advancing for 4th consecutive session. Apart from this, we also have Sobha. The stock seems to have given a breakout from its cup and handle chart pattern with good volume of over 2.8 times its 10 session average volume, and the stock has also touched record high level today. Lastly, we have Tata Teleservices. The stock has actually given a breakout from its double bottom chart pattern with volume of over 18 times its average volume of last 10 sessions, showing very strong participation in today's breakout. Also, the stock has surpassed about its 50 DMA level. So for those reasons, the stock is in focus.
Bit of stocks out there. We've discussed BSE, there's Tata Teleservices as well, which is holding out. Kunal, just as to what is it that you pick out, Bharti or Idea? I mean, I know Idea FPO is already done with, but what's looking like the stronger telecom chart?
Well, of course, the strongest one is Bharti Airtel, without any doubt, because the stock has managed to withstand a lot of volatility, and I'm not talking about the last couple of months, but over the last 3 or 4 years as well, that stock has managed to stand up quite well for itself. There was a zone around the 550 odd mark for Bharti Airtel where the stock consolidated for I think 2 or 3 years, but post the breakout for the stock, it's not looked behind, and then it's moved on, on a very gradual, steady kind of a manner. So on the other hand, Vodafone Idea, absolutely volatile. The stock on the short-term charts, on the medium-term as well as on the long-term charts, has been gyrating with a margin of I think 30 to 40% as well at many points of time. So it all depends on the risk appetite of each individual investor or trader. I would believe sturdy in terms of the sturdiness. Bharti Airtel of course is one of the stronger one. But in terms of a potential breakout, say from a short-term trading play, Vodafone Idea has given that breakout about 13.75 mark, which means potentially we could be looking at 15 to 15.5 as a near-term target.
Okay, that's Vodafone Idea and Bharti in trade for you, buzzing very smartly, and a lot of numbers as well, which are due for this week alone. Today, of course, you've got Tata Consumer, which is slated to come out with its numbers. Tomorrow is a very important earnings day. You've got Axis Bank, you've got Unilever, and then, of course, LTI Mindtree. But Sunil, so far, there's been the IT sector, there's been Reliance, and there's been HDFC Bank. The large caps haven't done all that well when it comes to earnings. Any particular pocket where you think there is scope for outperformance in this market?
I think consumer discretionary is where I think there should be some scope for outperformance because it's not been performing for quite some time, and I think it's finally it should start showing numbers, I suspect. And not only from an earnings perspective, the guidance for the next quarter also from consumer discretionary, I expect those numbers to come out positive. So I'm a bit expectant on the consumer discretionary front. And this is a broader basket of consumer durables, auto, as well as housing.
There's Maruti as well, which is slated to come out with its numbers this week on 26th. And Maruti is already at a record high, by the way, ahead of its numbers. Let's just bring up that intraday graph because it's back above that 13,000 rupee per share mark. There you go. Almost a 2% bump up on that stock. But what's happening across dealing rooms? Let me take it across to Sharad. Sharad, hi, afternoon. What's the chatter like?
Well, yes, in the dealer buzz, the stock in focus is Zomato, as the HNI counters has been seeing a bit of selling happening across various dealers, as we have been speaking about. Now, this is the biggest intraday fall seen in the stock over the last 4 months itself, and the dealers suggest that there is a profit booking happening across certain segments in the HNI space. Also, roughly 29 lakh shares have exchanged hands in 2 large trades also today, which translates into 0.03% equity. And importantly, in the month of March itself, last month, Antfin had sold almost 2% stake in the company and actually getting its stake down below the 5% mark. Importantly, the Zomato was in news because of increasing its platform fee hike from 4 rupees to 5 rupees in the key areas, and analysts had expected an increase of almost 85 to 90 crores in the EBITDA as well. But looking at the stock's trajectory, that is up almost 3 times over the last 12 months. So we are seeing some profit booking in the HNI counters.
That's where the stock price is. Today, of course, it's seeing a meaningful dip, that of about 3% as we speak right now. By the way, in terms of earnings, like we just highlighted, tomorrow, of course, is a very crucial earnings day. If we can just get in Vinny to tell us what to anticipate from Tata Consumer as well. It's due to report its numbers. In fact, Vinny, tell us what your poll is penciling in.
So this time around from Tata Consumer's numbers, we are expecting a revenue growth of around 9 to 10% better than other FMCG companies in terms of a growth. We are expecting the profits to see a slight bit of a increase of around 3 to 4%. Let's keep an eye out on that in terms of the profits. While margins are expected to see an expansion of 100 basis point, tea inflation that has come down. So yes, we are keeping an eye out on that. But commentary is going to be key for the next few quarters, because we have seen again inflation rising back, whether in cocoa prices, coffee prices, tea prices, a bit of a volatility there. So what is going to be the outlook going forward in terms of raw material cost as well as margins are key factors to watch out for. Food and beverages expected to do, or food business is expected to do better. So a high, double-digit growth is what we could say one could expect from food business. While in terms of the beverage business, we're expecting a high single-digit growth. Food business obviously is going to be led by Sampann growth, while overall we're keeping an eye out on Capital Food, the acquisition, the update on that front, as well as Organic India's update coming in. When does that Organic India's numbers start coming in the balance sheet of Tata Consumers? Other than that, let's watch out for market share trends in terms of tea. So these are the key factors that we're keeping an eye out on from Tata Consumers.
Okay, that's about Tata Consumers. We'll come back to you, Vinny, for HUL. But in the meantime, take a look at the markets. It's fallen a bit. It's not a whole lot, but from the highs of the day, we have definitely given up for Nifty as well as Bank Nifty. So in the last few minutes, there has been that incremental pressure that has come in. And remember this after the fact that the Nifty small cap index just managed to hit that all-time high level yet again. From there, I think there has been a bit of a slip in the market. But the small cap index actually is holding up. It's, I think, only the Nifty and the frontline stock which is coming a bit under pressure. We'll analyze that a bit more with the technical experts. But before that, Vinny, tell us about HUL as well. What's the expectation from the giant?
Yes, so this time around from the FMCG major HUL, we are expecting a muted growth in terms of revenue, around 0.6% growth. While in terms of the profit, we are expecting a slight bit of a decline. Margins, so operating performance is also expected to be muted. EBITDA margins expected to see a bit of a contraction around 30 basis point. You could say 23% is what we're expecting EBITDA margins as versus 23.3% last year. Volume growth expected to be muted at 2 to 3%. Low single-digit growth is expected from the company this time around because rural slowdown, that's still there. We're not seeing a sharp recovery. Other than that, increased competitive intensity from regional players, which we've seen in the last few quarters, those demand trends, that's similar. So last couple of quarters, the trends that we've seen, we're expecting similar trends to continue. Now, what will be interesting to watch out for is that the subdued growth in home and personal care segment, how is that there? Commentary on that food and refreshment segment, that's also expected to be muted. And other than that, on the margins, we'll be seeing an impact of the royalty increase that's there, as well as in terms of the impact due to the expiration of the GSK consignment arrangement. So because of that, we are seeing that income is reducing, so maybe some bit of an impact in terms of the margins. Let's keep an eye on important commentary that could come in from the health food drink segment. How is that shaping up? Because we've seen a lot of issues in the overall sector as in health food drink segment because of the sugar content. What is the commentary coming in from HUL on that front? Right now, there was no issue on their front, but yes, what is the commentary there is key to watch out for. Commentary on competition, regional players, rural demand, and outlook for margins and raw material cost is a key factor that we're keeping an eye out on.
Okay, that's the assumption coming in from what to expect from Unilever when it will declare its numbers tomorrow. But just wanted to understand, Sunil, what your sense is in the market. You've, of course, given us your overall thought. But where is it that you still find pockets of value and undervalue in this market? Although a lot of it already looks toppish.
To me, I think the banking segment has suffered a bit, which is I don't think is entirely justified because the future for banks I see as very good. So overall, the BFSI space, I would say, because I think the one thing that you can take that with the manufacturing cycle from the private sector getting delayed, and that's where bank lending probably, while it's growing at healthy double digit, it's probably not growing even faster. But moment that capex cycle kicks in, and you see that happening when consumer discretionary numbers coming in and the capacity utilization goes up, I see that the bank's scope to lend to the corporate segment will have a very positive impact on their NIMs. So you have to take a slightly longer term view. Maybe in the next 3-6 months, they may not go anywhere, but I would still place my bets on the BFSI space, banks, good quality NBFCs, and on the other side, including insurance and asset management and wealth management firms. I see that growing India, that's the one piece which has probably not reflected the future potential fully in the current prices. So, in a relative terms, the pockets of value I would see is there. Second is, for me, again, go back to the consumer discretionary, because those numbers have disappointed, market hasn't really supported those with rise in valuation. So, as those numbers improve, I would expect some amount of growth in EPS to come better than expectations, and hence that would turn out to be some kind of a slight value there to capture.
Okay, point taken. But you did hint about manufacturing, right? Talk to me about what you make of the stock market, stocks with respect to the manufacturing and the defense theme, because they had run up quite a bit as well. And today, of course, shipyard companies are doing quite well. What's the take on defense and manufacturing as a theme?
I think that a lot of the good news is in the price. I think it's pretty much an open story today. There's no surprises there. So to that extent, that I would say that the growth for the next year and a half is kind of factored in today. So if you have a longer term perspective of, let's say, 5 years, I would say picking good quality manufacturing companies will deliver wealth creation. But the fact is that these are companies which are highly, cyclical, operationally and financially leveraged. So what happens is that market has projected a certain cyclical recovery in their EPS growth and has factored that in. Now, the only worrisome factor there is that domestic private sector capacity expansion has not picked up speed at the way it was expected to, because the capacity utilization in the country has got stuck at the 75-76 level. When that makes a decisive breakout to 80% plus, which has happened the previous time, it happened in the late 2010 kind of a period, you will see that the private sector capacity expansion shooting up will then the winners really will rake it in. The point is that today it's very hard to predict that winner. So the market has spread itself across all the infra-related stock picks. So if you have a good quality stock picking and are able to read that future growth well, there is still value there. But like I said, you have to have at least a 3 to 5 year minimum view around the infra defense spec, number one. And number two, you got to hedge your bets across 2-3 players and not bet all on 1 or 2 players winning it, because when it comes to a bidding cycle and order books, right, people will tend to undercut and bid and win it. So I think that's a good play. And the other good way to play that is through corporate banks, right? The manufacturing, because ultimately bank financing is going to be 70% of the funding. Only about 25 to 30% will come in through equity. The balance has to be lenders, and banks are going to take the lead there. So I would play the whole infra defense story through corporate banks on the one side and through a diversified pick of EPC contractors and all of that. And generally building materials, I would say cement, steel and all of that should form part of your portfolio. So having a good diversified portfolio within the infra capital backs is important. And second, having a slightly longer term, don't expect massive wealth creation to happen in the next few months, years. Give it a bit more space and time, because like you mentioned, valuations have run up quite rapidly in that space.
Yeah, they sure have. Sunil, always good to have you on the show. Thanks for taking the time out. Let me get in some BTST trades as well before we wind up. Kunal?
So I'll go with the ban AB Capital from current levels also, targets of 240, stop loss could be kept at 208. And Biocon is the other stock which is completing an inverted head and shoulder pattern, so would suggest a buy 292 as a target, stop loss at 265.
Right. Naresh, what about your BTST ideas?
So that would be a buy on Eicher Motors with a stop loss at 4,500, target price of 4,600. Second would be a buy on IDFC Limited. The stock is on verge of a fresh breakout. Stop loss at 124, target price of 130.
Okay, let me now hand it over to Vinny to walk us through how the day has been.
Okay, seems like, we are going to be closing the Nifty on the positive side. Yes, off the day's highest point, 22,360 levels is what the Nifty will be managing to close on to. Other than that, in terms of the sensex, also 73,735, up only 1/10% in trade. Clearly, both the benchmark indices are off the day's highest point. But let's look at what the Nifty mid and small cap did as well. That's something interesting to watch out for. Outperformance clearly coming in from the broader markets today. The Nifty mid and the small cap managing to hold on to gains of more than 1%. And over there, the advance decline ratio, when you look at it overall, is in the favor of advances versus the decline. Let's pull up Nifty Bank, managing to hold on to some bit of a gain there. While among the top sectorial gainer today that one could look at, we would see the Nifty Realty Pack seeing sharp gains today, closing with gains of 2.7%. We do have macro tech developers that will be reporting their numbers tomorrow. But yes, keeping an eye out on all the realty names. We had DLF, Oberoi Realty, all of these stocks have been buzzing in trade today. The Realty Pack was clearly the highlight of the day. Other than that, Tejas Networks was among the top gainers today that we saw, because what we saw was a good set of numbers that came in from the company. On the back of numbers, we did have Kesoram Industries that was moving, Aarti Surfactants that was in trade in focus as well. Other than that, let's keep an eye out on Cummins India. That was one which was trading on the back of its overall brokerage note that we saw coming in from Citi, AB Group, Aditya Birla Group actually, and the Birla Group. Overall, all those Birla Group names today were buzzing in trade. So AB FRL, AB Money, AB Capital, Grasim, Indus Towers, Vodafone Idea, and because of that, we had Indus Towers, which was buzzing in trade as well. So yes, that's how it looked like. Grasim also is among the top Nifty 50 gainers, and that's what we'll be winding down the day on. Yes, off the day's highest point, but managing to hold on to a bit of a green. That's how the market looked like.